The IRS has come out with their 2019 Dirty Dozen tax scams list, and it highlights inflating deductions and credits. And listen carefully to our guest. She's been doing this a lot of years. She understands and she knows what the red flags are. So, as always, CPA and lawyer extraordinaire, Patricia, welcome back.
Hi, Frankie. Thank you very much. My pleasure. Today, 4 weeks from today, is April 15th, and it's the legal tax filing due date for 48 out of 50 states. The other 2 states are the state of Massachusetts, or the Commonwealth of Massachusetts, as we refer to it here, and the state of Maine. They actually have a legal filing date of April 17th. The holiday of Patriots Day is honored in 4 weeks, and then Tuesday, April 16th, is Emancipation Day down in Washington, D.C., and that's a federal holiday. So
we get an extra 2 days here in Massachusetts.
We get an extra 2 days, and I just get more tired because everybody looks at getting an extra 2 days. And,
yes,
you know,
yes.
And that means I'm working an extra 2 days. But every year, this was perfect timing. Every year, the IRS does publish what they like to quote, end quote, as the Dirty Dozen. And this year, they actually highlighted inflating your deductions or tax credits, which I found very interesting because these have been hot button audit issues for the IRS for a while. And specifically, they want taxpayers to watch out for overstating deductions such as charitable contributions, medical expenses, business expenses for the self-employed, business expenses, and falsely claiming that you qualify for the earned income tax credit or the child tax credit and other types of tax benefits, education tax credits. They're pointing these out, and I understand why. They've put them on their Dirty Dozen tax list this year, and they actually considered them a tax scam, which I found interesting using that term.
I was going to say.
I found that using
that's
that
like really
term,
surprising. Yeah,
I was surprised. A scam. I never looked at these as a tax scam, but they're saying I think they're just trying to catch everybody's attention, saying that, for example, taxpayers may encounter these schemes, quote unquote, the common tax schemes of overstating deductions or falsely claiming tax credits as people prepare their own returns or hire others.
By the way, I just want everyone to know that in the material that you sent me, it also says there's a $5,000 frivolous tax bill that you'll get if your return does not include enough information to figure the correct tax.
Yeah, they're saying, file an accurate return, whether you do it on your own or don't fall for a preparer who's promoting that they suggest certain strategies that can put you at risk and say, oh, no problem, you won't get caught, or let's just throw this in here, or et cetera.
Right.
So they're saying, this is the best way to avoid triggering an audit is, of course, preparing a complete and accurate tax return. They're saying that's your best defense against scams. I'm going to say here, before we talk about those penalties that you read in my material, is that I think the best defense against making these mistakes, because most taxpayers are honest.